Hey guys, welcome back to Data with Dominic. I know it's been a while. I've just been tied up with some personal and work related stuff, but now I'm back and we're going to be pumping out videos like before. Anyways, let's dive into today's topic, which is MicroStrategy, a company which has rebranded itself to Strategy and which basically operates as a Bitcoin instrument or derivative. Okay, so what we're going to talk about today is what is MicroStrategy and how does it work as a Bitcoin derivative slash instrument, and why is it better than some of the other derivative slash instruments out there, such as the spot ETF from BlackRock, popularly known as IBIT, or UBIT from Vanguard, and things like that. So let's dive into the video. All right. So what is MicroStrategy? All right, just to give everybody a brief introduction, MicroStrategy started out as a technology company specializing in business intelligence. All right, which basically means they used to make software which allowed you to pull in data from your organization and create visualizations and dashboards and charts and graphs for decision makers in the business to quickly interpret data and make informed decisions. All right, it's a huge use case, and MicroStrategy was one of the first movers in the space. All right, so they have this platform called MicroStrategy Pro, which allows you to pull in data from different data sources. Could be your Excel, could be your ERP, SAP systems, and then it allows you to collate different data using joins, sort of like SQL but declarative, which means you drag and drop and graphically work with the data, and then it allows you to create visualizations for decision makers in your organization. All right. So Michael Saylor, who is the founder of this company, he was an MIT graduate, and he sort of figured out early on that business intelligence, data visualization, or just quickly interpreting data was going to be a huge plus point for organizations, and he started this company, MicroStrategy, and it quickly became a force field in the industry because they had the first mover advantage. And nowadays, obviously, we're more comfortable with Power BI and Tableau and things like that because they come with a huge ecosystem of products to work with, right? So Microsoft has Power BI, which allows you to work with the Microsoft ecosystem, and then Salesforce has Tableau, which allows you to work with its suite of products like ERP solutions and things like that. All right, and they're sort of eating MicroStrategy for lunch because of the ecosystem, right? But the important thing to note is that Saylor has a penchant for sort of finding of figuring out key trends in technology and human evolution early on. All right. So another case in point is this book he wrote. All right. He wrote this book called The Mobile Wave in like 2012. That was when that was just at the beginning of when mobile started taking over our lives. Right. Mobile phones got really good. The App Store ecosystems got really good, and then our lives really became mobile centric. Before which they were sort of desktop and computer PC centric. Right. So he quickly he wrote this book in 2012, and he had by then already invested heavily in the future of mobile technology. He invested in all the apps: Instagram, Facebook, YouTube, Google. He had really heavily betted on that segment of the market and made a fortune in those investments. All right, but that's again just to give you an idea that he knows what he's talking about when he takes a position, right? So, and it was not always like he was not always a big fan of Bitcoin. Like in the early days in like 2013, he tweeted out that Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. But obviously, he changed his mind in 2020. This sort of happened when MicroStrategy had gone into a bit of a slump because it was not um, the software business was not doing that great. I was not growing rapidly. It had its set of core customers, but it's not growing rapidly. But then in 2020, he was looking for a place to park the cash that MicroStrategy was generating because it was losing so much money due to inflation every year. He was looking for a place to park his cash, and then he stumbled upon Bitcoin again, and he did his research, and then he realized, oh, this could be the next big thing. This could be the hedge against inflation. This could be the true digital global reserve asset for the future, right? So this could be the future of money. And then MicroStrategy as a company and Michael Saylor personally started investing in Bitcoin, and that was when the stock was trading at like $12 a share. And now look where it's gone. It's peaked at like 420. Like crazy returns again. But all right, so let's sort of dive into how MicroStrategy operates as a Bitcoin holding company or derivative instrument, right? So basically, on their books, they hold a bunch of Bitcoin, right? And as of today, it's about like 500,000 Bitcoin, which is a huge amount compared to the total supply, which is capped at somewhere near 21 million. So they own a significant amount of all the Bitcoin that's ever going to be created. All right, and they're sitting at a 24% profit margin on their personal investment, but that's very short term, and that's not the important thing here. What is important though is why invest in MicroStrategy compared to the other spot Bitcoin or Bitcoin ETFs, right? Other Bitcoin instruments. The most famous is IBIT, which is BlackRock's spot Bitcoin ETF, right? So one of the reasons why you could choose to invest in MicroStrategy is that you have, as an organization, or as a family office, or as a trust, an investment charter, which states that these are sort of the bylaws that govern your investment making, where it could state that you can only invest in companies on the Nasdaq. All right, these are rules that you make for yourself, but which govern your investment decisions. All right, they could have been made before Bitcoin was a thing, but then these things are set in stone and they can't change. All right, so one of them could be an investment charter where you say, okay, I'm only investing in Nasdaq 100 companies, and then if MicroStrategy makes that cut, you have an opportunity to invest in Bitcoin, even though you have this investment charter limiting your investment options. All right. The other thing is non-availability of Bitcoin. All right, this could be due to geopolitical factors. Your country is not yet amenable to investing in Bitcoin, but you can, as a hedge, use MicroStrategy as the vessel through which you get exposure to Bitcoin's price movement. All right, so what that means is, say in India, you don't have very easy access to investing in Bitcoin or getting exposure to Bitcoin's price movement, but you can invest in the US markets. All right, so investing in MicroStrategy gives you that opportunity to give your portfolio exposure to the volatility in Bitcoin. All right, and if you see here, we have the Bitcoin versus MicroStrategy's dynamics, right? And you can see that it does very closely follow the movements of Bitcoin. All right, so we've got MicroStrategy in blue and Bitcoin in yellow, and in a sense, it does sort of mirror the volatility of Bitcoin. So you get exposure to that price action of Bitcoin. All right, and coming back to our point of why investing in MicroStrategy compared to other Bitcoin instruments. Another factor is the low cost of capital for operating companies. All right, so MicroStrategy is an operating company, which means they are listed on the Nasdaq, and they do have cash flows being generated. So they have a very low cost of capital, right? So if you and me want to take a loan in our personal name, we have to borrow money at like 7-8% now, right? But if you are an operating company with a proven business model and the ability to dilute shares and issue bonds, you can basically borrow money at 0 to 1% of interest rates. All right, and if you know that Bitcoin is going to be rising or appreciating at a rate faster than that, it's basically free money for you, right? So you borrow against your shares, and then you return money at a rate you think is less than what Bitcoin is going to perform, and then you basically have access to unlimited capital at very low costs. All right, and then this is sort of similar to what accretive financial engineering means, right? What that stands for is basically what Michael Saylor plans to do is, in his mind, he knows that Bitcoin's value is going to rise over the next 20-30 years, indefinitely, but over the next 20 years during his lifetime. So what he plans to do is use that perceived increase in value to sort of increase the shareholders' Bitcoin per share. All right, so what that means is the exact value of your share could be increased by diluting share capital now in exchange for the future growth of Bitcoin. All right, so he might issue new shares to raise capital to invest in more Bitcoin to put on MicroStrategy's balance sheet. But what that means is, in the future, when Bitcoin's price has grown exponentially, your same share which you held today would be infinitely more exponentially more valuable. All right, and finally, the last point, which we'll clarify a little later on, is that MicroStrategy can trade at a premium to Bitcoin or its net asset value, because there is no arbitrage opportunity. All right, so I'll explain what that means, but first we just need to look at what the books look like. All right, so as of today, these numbers keep changing daily because of Bitcoin's vol. MicroStrategy has 499,000 Bitcoin on its balance sheet, and the price is roughly $78,000. That puts MicroStrategy's net asset values at about 38.9 billion. Their operating revenue from the software company is sort of not really relevant, but they do have about $38.9 billion of Bitcoin on their balance sheet, and the current MicroStrategy market cap is 62.4 billion. All right, which puts the NAV multiplier or the MNAV at 1.6. All right, so what that means, in a sense, when you invest in MicroStrategy, is that you're buying Bitcoin at 1.6x of the current market price. All right, so you could be justified in paying these premium if if one of these points makes sense for you. All right, especially the first two, if you have investment charters or if you're in a region where Bitcoin is not available to you. But generally speaking, in a market sense, what could justify this premium on MicroStrategy stock? All right, so basically stock markets, as you know, are forward looking sentiment analysis machines. All right, so they've sort of look to the future, and that's priced in now, right? So if you have a new product launching, Apple's launching something new, price is going to move today for a product that launches tomorrow, right? In the same way, analysts believe that Bitcoin's price is going to rise mainly due to its limited nature, and hence they've sort of priced that in already. So there will be a sort of forward leading movement which MicroStrategy has compared to other stocks, because so much of its value comes from the Bitcoin it's holding, and that value is predicted to rise in the future. All right, and then the second thing is there is no arbitrage opportunity, so there will definitely be a premium. And what that means is basically that when you buy shares in MicroStrategy, unlike in a Bitcoin spot ETF such as IBIT, that those shares are not directly exchangeable for normal or legit Bitcoin. All right, so if you're a market participant, that means if you are a serious financial investor with a lot of money, and you invest in a BlackRock's IBIT spot ETF, what that means is BlackRock is holding the exact value of Bitcoin that you've invested into their spot ETF, right? So they're holding that Bitcoin with them. And if you're a serious investor who has been termed a market participant, which means you have serious capital behind you, you could go to BlackRock and pledge your IBIT shares, and they give you that Bitcoin back to you. So all right, so what that means is there can be no arbitrage opportunity, right? Wherein IBIT cannot trade at a premium, because if it does trade at a premium, and everybody was just going to buy the spot Bitcoin and then come and exchange it for the IBIT and then bring the price down to level. That's how they sort of maintain that peg to Bitcoin and its value, right? So there is no arbitrage opportunity with MicroStrategy because it's just a share, and it's sort of what share markets try and do is they try and find intrinsic value, and then what the investors believe the company's value is, that's what you're paying for it. There is no opportunity to exchange your MSTR shares for actual Bitcoin, and so there is no arbitrage. So if they're forward-looking sentiment analysis machines, they're going to price in some rise in Bitcoin's futures, so there could be a premium in the price. And secondly, like we discussed earlier, MSTR can grow its Bitcoin holdings significantly. They have a proven track record of over time adding to their Bitcoin balance sheet. All right, so if you scroll down here, you can see that for the last about 5 years, they've been steadily purchasing Bitcoin. All right, these green signs are all Bitcoin purchases at a mind-blowing rate. They've been issuing debt and bonds to purchase Bitcoin, and so they have a proven track record of purchasing Bitcoin. And finally, they can use their low cost of capital from being an operating company, which is the point I mentioned earlier, to again have cash to buy this Bitcoin and agree to financial engineering. All right, they can issue new shares, which you might get diluted a bit now, but factoring in Bitcoin's exponential price rise in the future, your shares will be worth exponentially more as Bitcoin's price rises, even though the Bitcoin to share value might drop slightly in the at the present moment in time. All right, and finally, there's the more optimistic place wherein MicroStrategy, since it's holding so much Bitcoin, and if Bitcoin becomes a global reserve asset of some significance, they have huge power in voting as to the future of the network, because obviously with the Bitcoin they hold, they become an important player in the ecosystem. You know, they could form a payments gateway with all the Bitcoin they're holding. They could start mining Bitcoin. They could start a lending platform if Bitcoin does become a global treasury reserve asset, right? So again, huge opportunities for MicroStrategy, and all of these very good reasons to invest in MicroStrategy. But again, the important thing is it's not Bitcoin. All right, and invest in MicroStrategy at your own risk. Do your own financial research. Only invest what you can afford to lose. And this is not financial advice by any means. I'm just trying to educate you guys on what Saylor is trying to do with MicroStrategy. So anyways, I hope you guys enjoyed this video. Don't forget to like, share, subscribe, and comment. and share this one with your friends. I'll see you guys in the next one. Cheers.